Awesome. Okay. Hold on. All right, we're live. And I just want to quickly make sure everything else is live as well. Great. Good. All right. Um, so, all right. Welcome, everyone. I'm going to just let it go. We're going to stay till it's exactly 1 o'clock, and then we can actually start. Um, Good. All right, everyone, welcome. And today we are live with a mortgage expert, April Burns. April has 20 years experience as a mortgage loan officer and is an award-winning lender. April is a local lender with Highlands Residential Mortgage in Tennessee, and she's known to provide clear communication, low stress, a positive experience on every mortgage lending transaction for all our clients, including me. And her area of expertise are first-time home buyers, investment properties, conventional loans, FHA loans, VA loans, purchase, rate term refinance, cash out refinance, second homes, and renovation loans. If you need to add anything, April, please feel free to. Welcome, April Burns. The floor is yours.
Hello, thank you so much for inviting me. I'm very excited to talk mortgages on a Monday. And you had some questions for me, right?
Yes, I do actually, and I'm just going to put this on silent. So, yeah, we've had clients send in questions. One of which is mortgage is not a one size fits all. What kind of mortgage is out there, and under what circumstance will you recommend each type of mortgage? So,
Okay,
tell us about the mortgages that that are.
definitely there is no one size fits all at all. So for first time home buyers, if they have not been able to save up any funds for a down payment, we are definitely going to look the route of THDA loans. We're blessed to have those here in the state of Tennessee. This is it's an opportunity for them to purchase a property, not have to have funds for a down payment, and it does cover a small amount of their closing costs as well. So that is the first route we're going to look at for a first-time home buyer that has not saved funds for a down payment yet. Um, with our If you've served in the military, or if you are a spouse of someone who is deceased that has served in the military, we're going to look at a VA loan for you, because that is a zero down loan as well. And that one you do not have to be a first time home buyer, but it is a zero down loan. It's a great loan. There's no mortgage insurance on that VA loan. Um, One of my favorite loans to do is the VA loan. It's just a rates are great, very simple process. If you do have a lower credit score, I'm going to just say in the lower 600s, and you have a small down payment of, like, let's just say 3.5% of within the sales price range that we have decided that you are approved in, then we're going to look at an FHA loan for you. Because FHA, the guidelines are a bit more lenient for you to get that approval that is needed. And that's the FHA loan is definitely more for individuals with a low down payment and lower credit scores. And then our conventional loans are just the standard loan of you first time home buyers. We can do 3% down. If there's the home ready loan that they have, if your income is within a certain range, the home ready loan allows you to have a little reduced mortgage insurance, and sometimes the rate is a little bit better as well. Then we do also have, let's see, what am I missing here? USDA loans. USDA loans. Those are specific to certain areas, though. So that's where it gets a little tricky with those. But those are specific to properties, and you do also have to meet income limitations with those as well. So this, as far as like what type of loan you are going to, that's going to suit your needs best, that is a conversation that we are going to have once you filled out your application.
So that's usually something you find out from individuals once they've applied to your.
Yes, because there really isn't any way for me to know
Mm,
which one you're going to fit within until I've looked at your income, I've
mm.
looked at your credit report, and looked at your assets. Because just because you qualify for a zero down loan, it might not be your best option if you have saved up funds for a down payment. And so my job is to give you your options, right? And let's go over what they are, and you have to figure out which one you're most comfortable with.
Awesome. Okay, so you mentioned something. Tell us what's THDA and USDA.
Yes.
How are they similar, or what's the similarities?
So the similarities are that you're not having to come up with a down payment, right? Um, the differences are going to be that the USDA one is a little bit, probably a little bit harder to get approved for. Generally, whenever we're running the two in the system, depending on credit score, then I can say that in my experience, that THDA has been easier to get approved in this system, in the online underwriting system, versus the USDA one. But again, it's going to depend on that individual's credit history and their credit scores. But USDA, that is a great loan as well. It has very low monthly mortgage insurance on it, but that one, it can get tricky because let's say that we are like, okay, you can get approved for a USDA loan, but
Mm.
it also has a property eligibility, and that's something that I can send to the individuals who are on this live stream if they would like for us to send that out. Like, it's a link you put in the property address, and it tells you if that property is eligible or not for USDA financing.
Awesome. Okay. Um, Next question that we have here is what is the outlook for interest rates in 2024?
Oh
There are
my goodness.
expectations that the federal government will drop interest rates this year. Should we wait to apply? How soon can we refi if we just bought a home?
Okay, so let's start out with like what are the projections for the rates, right? We have been hearing over and over that we should expect that they will be lower, definitely by the end of the year. The last quarter, I think, was the last prediction that I was listening to. I mean, it varies. There's so many factors that actually have to do with what our rates are each day.
Mm.
But if you did you ask me about the prime interest rate, the Fed's interest rate?
Mm-hmm.
Okay, so that can get confusing for people when they're purchasing a home because that is a short term interest rate, right? Like that's more for your automobiles, your credit cards. That's not where our mortgage rates are derived from.
Oh, really?
So let's just say, like, they haven't lowered the interest rate yet, right? They haven't lowered it since I believe 2020. So the prime interest rate. So even though that has not been lowered, even though our rates were mortgage interest rates were higher the last quarter of 2023, you've
Mm.
seen them drop nicely without the Feds lowering the prime interest rate.
Hmm.
So the prime interest rate, what you're talking about, that's more like for automobile loans, your credit cards, your second home, your line of credit, like when I say second home liens, your home equity line of credit, that's going to be tied to the prime interest rate.
Okay. So, so you've answered that we'll, what's it called, interest rates, we're hoping that it will drop, right?
We
Is
are
that
hoping that they will drop. Yes.
so for
And
some?
and Timmy, here's the thing: they're not terrible right now, right? Like, I mean, there were, they got up, to we were quoting, 8% last year,
Yeah.
right? And in some situations right now, and I do not like to quote rates for any specific person, but like, let's just say, like right now, THDA, their rates are published, right? And so they give everyone the exact same rate, no matter like what your credit score is. And right now, theirs is 6.5%, right? So we're going in the direction we want to be going, which is down.
Hmm.
So, which is nice. It's, and you asked also, is this a good time, right? Like with where the rates are right now.
Mm-hmm.
That is such a personal question for each individual, right? Like, as far as like, is this a good time for people to buy? If you're able to get pre-approved for a home loan and you're currently renting,
Mm-hmm.
and I can get you into a program and it fits your needs, it's a payment that you're comfortable with, absolutely, right now is a wonderful time for you to purchase, because the prices of homes are just going to continue to rise. That's not declining, right? So what would you be waiting for? This would be an amazing time to go ahead and purchase, because there are so many people that are misinformed, and they are waiting for rates to, they're like, maybe in their mind they're like, I want rates to be in the fives, right? Like, and then my payment will be this and I can buy this amount of house. So once rates lower, there's going to be a lot more competition for our buyers out there. So we really want to inform our buyers right now that if you can get into a property now and you're comfortable with the payment and it's the home that you want, it is so much easier for, let's just say, in 6 months,
Mm-hmm.
for us to review and see where rates are. And if they're favorable to what you have now and it makes sense to refinance, that's something we'll do for you, because refinances are very simple. They're very easy to do.
Okay, so now that's the part you're going to talk about next. That's the next question. How soon can I refi if I just bought a home?
There isn't really a time limit. It just, we just look at it and just make sure. I mean, you've got to, normally they want to see that you've made some payments, right? Especially if you're a first time home buyer, but
Mm,
you've got to have some equity in the property as well. So it's going to depend on, did you just do that zero down loan,
mm,
right? And so you don't really have equity yet to refinance. So you might need to wait a year, 18 months, before you got enough equity in the property to qualify to refinance. But if you're someone who did put money down, I mean, you would qualify pretty quickly. I mean, depending on if it made sense. You just want to make sure that you're doing it at the right time. And that's why you need a good lender to help talk you through these things and saying, hey, if we do it now, this is what your payment will be.
mhm.
But, or do you want to, wait? They keep saying they're going to keep going down. It's really just going to be, what are you most comfortable with as the borrower?
Awesome. So hypothetically, people typically think maybe until they have like 20% equity is when they can do when they can refi. Would that be right?
Oh,
Or
no. Mm-mm. No.
so like what's the lowest percentage that they have to be to qualify for refi?
When we're looking at refinances, I mean, it's going to depend on the loan, but in the borrower situation and their credit score and then what we can get it approved for, But generally, I mean, you could do it as little as 5%.
Good. There you have it, guys. Okay, so next question, or I don't know if you have anything else to say on that.
No, I think I'm
Good.
good.
Good. Next question. What is the difference between interest rate and annual percentage rate? Which one is the more, excuse me, more important for me to pay attention to?
So your interest rate is obviously very important. And that's the one you're going to want to pay most attention to. The APR is something I would refer to that more of like just a possible comparison tool if you're comparing two companies who are giving you the, possibly the same rate. Because what the APR is that's that is the rate, and that's going to include things like your all the fees associated with doing the loan.
Hmm.
And where that can get a little um, gray, I would want to say, or blurry for some people, is that the APR can change from one company to another just by maybe one loan officer putting a closing date of, let's say, March 1st versus someone who says March 30th. Because the days of interest are included into what the APR is. So that can get a little bit like, if you're choosing between two companies, you've got to really make sure that you're comparing apples to apples. If
Hmm.
their rates are the same, it could be as simple as one person's APR is less because they put your closing date at the end of the month, not at the beginning of the month. There's just so many little things. So definitely interest rate over APR, but there's so many things that you want to look at as well. You're wanting to look at for yourself, like you're looking at, like, what do they have? What do they have in there for my property taxes and homeowners insurance estimated, right? Like if you're looking at one company, and let's just say that they're using, it looks like pretty accurate information, taxes and insurance, and the next person has like, $30 a month insurance and $70 a month taxes, you've got to use, like, why are they so different, right? Like you have to use your own judgment there. And again, if you have a reliable loan officer, that person is going to say, hey, let's look at these together, and let me tell you what the difference is. That's not obtainable. Your insurance is not going to be that low. And look at the whole picture. You're not going to just look at the APR. You're going to look at your loan, just the loan estimate in all pages, but you're going to look at, what do they have your interest rate at? What do they have you coming to closing at? What do they have your payment at? So there's a lot to look at.
Okay. All right. I'm going to leave it at that for them to ask you more questions
Okay.
when they want to. Okay, so next question will be, how much is required for down payment? I want a conventional loan, but I
Okay.
do not have enough to make a 20% down payment on the prices I am seeing in the market. Can I make can I put down less than 20% for a conventional loan?
Absolutely. Yes. So with conventional, you can, depending on if you're a first time home buyer or not, you can put down as little as 3%.
Hmm.
Yeah.
As low as 3%
Yes. Yeah.
for a conventional loan.
Yes.
Tell us, doesn't that mean that they would have to pay a mortgage insurance with that loan?
Yes. Yes. So anytime with conventional, if you are not putting 20% down, you will have the mortgage insurance. Okay. There are ways to not have it in your monthly payment by like maybe financing it. Um, not, I mean, sometimes that comes out to be really pricey. Um, but 3% down, 5, 10, whatever 15, all of those are going to have mortgage insurance. And from when I started in this industry a couple decades ago, The mortgage insurance has definitely reduced in the monthly amounts that borrowers are paying.
Really?
Hmm. And
Oh,
that again, it's an insurance, so it's derived from, how much you're putting down, what your debt to income ratios are, what your credit scores are. All of that is a factor in determining what your monthly mortgage insurance will be.
okay. All right, let's move on. Let's look at the question that we have next. How soon can I lock in interest rate? Are there fees to lock in rates? If yes, what is the typical charge? Do rates do rate locks include all of the other loan costs? I think should be there.
So let's say that you go under contract for a property that
Mm-hmm,
Timmy has negotiated and you are under contract to purchase a home.
mm-hmm,
That contract gets sent over to me. And then that is when I will review and we will determine if right now is the time to lock in your rate. No, there are no fees for you to lock in your interest rate. It's just part of the loan process. Um, if you, let's see, there are, and I say there are options if you are purchasing a property and let's say it's not going to close for 9 months,
mm-hmm,
then there is an option to lock a rate out that far. And that is a circumstance where you would have an upfront fee. So I do need to make sure that I explain that there is an option for that, but we aren't really using that right now. I haven't had anyone that's wanted to lock out that far because of just the projection of rates improvement over the next year. Now, something that we do that is pretty amazing is let's say you went under contract today and you're not closing till the end of March.
mm-hmm,
If rates lower a
mm-hmm,
1/4%, let's say 2 weeks before closing,
mm-hmm,
and I'm looking at it and I'm like, wow, so rates are nicer than what they were back on February 12th. I really need to look at this for my client.
mm-hmm.
I'm going to review it. And if rates are, it has to be a full 1/4% improvement. But if they're better, then we actually improve our borrowers' credits, borrowers' rate 1/4% for them at no charge.
Really?
Yes.
Okay.
Right. It's amazing. I mean, because I mean, 1/4% can, I mean, that could cost up to like 1% of a loan amount. So if you've got someone with a, $300,000 loan amount and you're like, hey, guess what? Rates are better. You're getting a quarter improvement. I mean, that you basically just saved them, as an example, $3,000 if that were the case. So, and it's like, oh, hey, by the way, you're getting a quarter better rate. And they're always very excited when that happens. So,
That's a lot of money. So now let's still stay on this. Let's look at new construction where
okay.
people closing like 5 months down the line
Yes.
and they're worried about locking the rates now.
Mm-hmm.
What would your recommendation be?
Oh, again, it's gonna be dependent on the borrower, right? In
Mm,
their circumstances. If they are like if they're pushing it on the debt to income ratios and we know that we definitely cannot, like if rates improve, decreased,
mm,
let me see, let me rephrase that. If
mm,
rates increased,
mhm,
that they could be in a little bit of a pickle, we would look at like sharing options with them of here's an option to go ahead and let's get you locked in with a float down option, right? Like, and what that means is within 30 days of closing, if
mhm.
rates improved, they have an opportunity for their rate to be lower.
So you call that what, float down
A
option?
float down option. Yeah.
Okay, guys, note that float down option. Okay. Um, so now final question here, and then you can tell us anything. Are discount points worth it?
Discount point. So it has to make sense. Like it can get expensive, and what I have to show, um, what I have to show the buyer is this is what you can get if you, let's just say they're like, I want to spend $5,000 on buying down the rate, and I'm like, okay, well, let's see what we can get with $5,000.
Mm,
So we'll look at that. We're going to look at the payment difference that makes to do that. How long are they going to need to keep this specific loan?
mm-hmm.
Bef- I mean, because like who wants to spend that kind of money and maybe be moving in 18 months, or whatever the circumstances may be. They would need to keep that loan. That means like not refinance anything because you lose that money, right? Like, so your discount point, you're basically saying, I I want the best rate I can get if I buy it down, this amount, and how does that make sense for me to do that? That's the conversations that I'm having with individuals right now. Because
Mm,
if we've got seller funds,
mm-hmm.
if we've got a seller option where a seller is paying a nice chunk of closing cost, I'm going to look at maybe doing a 1 year buy down, right? A temporary buy down, to where if rates improve enough, let's say in 6 to 8 months, and they want to refinance, they're not losing that money. That money will be applied to their principal balance when the payoff is ordered. So
Okay.
there's options, and I know that can get a little confusing, but those
Yeah.
are things that I show people whenever, like if they're under contract, and when I see that we've got a nice amount of funds being paid by the seller, then I want to look at what can we do with those. What's the best way to use this money
Mm-hmm.
so that it doesn't get lost, or like the borrower, how does it benefit the borrower?
How does it benefit the borrower?
Yes,
Okay.
because the whenever you're doing a permanent buy down, I mean that's funds that you're paying,
Mm.
that hopefully you're probably going to need to keep that specific loan for a year or two before it makes
It
sense.
makes sense. Okay.
Yeah,
Yeah, because that was the next question I wanted to ask you. Like, how long should you keep the home to make for discount point to make sense? So thank you for saying that. We have a question here, and it says, "What documents will I need to provide to apply for a mortgage, and how recent should they be to the time of getting pre-approval?" Anyway.
great question. So if you are a W-2 employee,
Mhm.
you should expect that I am going to request your most recent 30 days of pay stubs, last 2 years of W-2s.
Mm.
If you're self-employed, these are just for income. If you're self-employed, I'm going to need at least the last 2 years of your tax returns, business and personal. And to confirm like what assets you have, depending on what conversation of like where they're derived from, where your down payment's coming from, and your closing cost, then I'll just ask for certain documentation from that account as well.
Okay, so I've had people who just got a job, say last year, reach out to me and say, "Oh, yeah, I want to buy a house. I think I'm ready." And they were probably in school for the last, say, 3 years before
Okay,
we got the job last year. Is that doable? Can
it
they
is.
buy a house?
Yeah, all day long. Yes. So where that the only time that becomes a little bit of an issue to me is if someone is a commission employee, right?
Mm,
And it's so they've only got 1 year of variable income. Like and what that means is their income changes monthly. It's not the same. It's not a straight salary or hourly job. So that's one that we would have to just really look at to see if we can make that make sense, or how much longer they would need to continue at that specific job and position before we would be able to close a loan for them, because we have to figure out how do we determine what their income is. And a good 2 years of commission income is the rule of thumb, because it gives us the ability to take the average of the last 2 years to figure out what are we going to use for a monthly income for this individual. But let's say that someone has been in school, for the last 4 years or 3 years, and they have an offer letter that they are going to start a job that's related to their line of work. There are circumstances that we can use that offer letter and as their income. Like, so let's say that they don't start their job until April 1st. Then we can go ahead and get them approved. And again, this is where it gets a little tricky. There are circumstances where we have people traveling across the country and they're transferring, or they're starting a whole new job, from California to Tennessee. And we do not need for them to have a pay stub yet before we can close, because we can use their offer letter. Now, if we got someone that's fresh out of college and they haven't started their job yet, we're more than likely going to want a pay stub before we close. Again, it's really just going to depend on, did they have a job before school? Like, do they have credit, good credit history? So, and do they have money for a down payment? So again, it's going to depend on the individual and their circumstances.
All right, time up. We're 1 minute over time, but we have 2 big questions.
Okay.
And I don't know. Can you spare like 3 more minutes?
Sure, go ahead.
So those 2 questions, guys, we're going over time for like 3 more minutes, and I'm going to just give you the 2 questions so you can just find a way of answering them quickly as we round up. How does the local school district impact property values? How do I assess the resale potential of a property? And the last one, what document do I need to have to get a second property?
For a second property, what documents do I need for a second? I'll let you answer the first one, Timmy, because that's
my area, right?
That's your area. I'm not stepping on your toes there. I know when not to speak. Documents for a second property are going to be the same as a first. Okay. You are going to need to put more money down than you would, because it's a second home, right? Like, it's not your primary home. And when you think of things on the banking level and how guidelines have been written and the way that we're analyzing things when we're reviewing the information, a second home is a second home. It's not your primary residence. It's a higher risk to loan on a property that someone's not going to spend as much time at, right? It's not going to be as well taken care of generally. So the down payment requirements are a bit more, but it's a very simple process though. I mean, if you've got funds if you've got a down payment, then it's the same. I mean, we basically qualify you for the home that you have already and for the home that you're purchasing. Very simple.
Awesome. So, but to round up that last question of second property, would you say that even if they're buying that second property, does interest rate have a role to play because it's a second property? Is it going to be higher?
Yeah. Yep. One? Again, it's a higher risk, right? So the interest rates are generally going to be higher for a second home than a primary residence. Yes.
So higher interest rate. And then if it's going to be FHA loan and they already had an FHA loan, how does that impact buying a second property?
So there's requirements, like technically you're not to buy, if you have a FHA home and you are purchasing another property and you need to go FHA, there are a whole list of requirements for that. Like, as far as like, it needs to be 100 miles away from from the home that you're in right now. The new home needs to be the primary residence. Like that, you can't buy another home and it be a second home and be FHA. Does that make sense?
Yes, yes.
Okay.
I want
So generally, if you're buying a second home, it's going to be a conventional.
So, all right. So, guys, you have that. It has to be one FHA loan, and it has to be 100 miles away,
Yes. So
right?
I mean, we do loans where people have two FHA loans, but it has a list of requirements.
Awesome. Okay, I wish we had more time, but we've gone past time. So we're going to be talking about the answer to this question: how does the local school district impact property values? I'm going to reach out to you personally. So if you don't mind, please email me on um, txre@outlook.com or temi.falana@outlook.com. I will reach out to you personally and answer that. Thank you for your time. Thank you, April. Um,
Thank you.
and guys, reach out to April. She's had a contact info on the screen all the while. Please reach out to her to answer your private or personal questions. And we look to bring you back, April. I think I have more questions than I thought. We're going to bring you back. We still have more questions for you to answer.
Perfect.
Thank you for your time. Thank
Thank
you for
you.
joining us. Have a good one.
You too. Bye, everybody.